Today is 17th of April. Market opened with a gap, and after the initial pullback managed to recover and close at its high up 57.83720. Now over the last few sessions we see actually 3 bullish bar. However, there's no noticeable increase in volume. The fact that we do not have increase in volume today after making a recent high here, market is more likely to actually pull back from here. Mentioned previously that after a severe sell down like this, market is more likely to actually follow by a couple of wild swing, and this is what we are witnessing right now. The opposite end of the gaps actually offers resistance, and that is at about 3,800. The opposite end here provides some level of support, 3634. Now we do have an intraday high here, provide a weak support that is at about 3688. Let's take a look at the US market. This is S&P 500 on the weekly chart. This is the 10 and the 40 week SMA, which represent the 50 and the 200 days simple moving average respectively. So you notice we have a dead cross. So this is what we are seeing right now, is a counter trend move. The 40 week or 200 days is a resistance to watch and to see whether we can recover. The fact that we have a severe sell downs, and that was attributed to the sweeping tariff announced by the US government, is not likely to actually settle that soon. So to recover above the 40 weeks appeared to be quite a difficult task. More likely after the upward move we may see a further downward swing. At best it may trade sideways before making another low. So this support here is an important level to watch. Making this low will confirm that market is likely to actually go down much further. The low here is at 4835. This is your Nasdaq. Similarly, this is the 10 and the 40 weeks SMA. We have a dead cross, and right now we are seeing a counter trend move. I'd like to actually observe the next few weeks, and if you're not able to recover above the 40 weeks, more likely it will continue its downward move. This is Brent crude. Finally, I have taken out the support at $71, and right now here it is experiencing a weak bounce. The support right now serves as a resistance for any upward move, and the fact that this is a very significant level, we'd like to actually watch to see whether it can recover, feeling which is more likely to actually move down, and in the process it will affect the oil related stocks. This is your 10-year treasury yield, and we see very violent move recently. Though it is somewhat pullback, but it still remain very elevated. During the upward move itself, it managed to hit a high of about 4.6, and this is very damaging for REITs and high capital intensive industry. Now if it remain elevated, then REITs is not likely to perform. Now there are central banks, ECB, Federal Reserve, thus it has indicated that they may cut interest rate unless it's very substantial. Otherwise the treasury yield may remain elevated, and it was actually attributed to the selling of the bond. If the sellings remains unchecked, then it's more likely that the yields will continue to actually move upwards. Let's take a look at some of the stock we have been discussing. Mentioned previously that actually most of the chart pattern has been damaged, so you need time to repair. Example, Centurion, this has been a strong stock, but unfortunately notice we have wide range reversal bar and we have gap. Now we managed to actually close the gap, alright, but today bar doesn't inspire confidence because it trades a small body with tails on either end. This is usually a sign of uncertainty, and the fact that you approach this level here is more likely to actually pull back from here. If you notice, the thing is actually flat, so there is no trend characteristics. At best it will just consolidate, and this is extremely a big sell down, so the consolidations will take some time. If you take a look at the weekly charts rather, so you can see it's before this sell down, you notice there was a run up, and this sometimes indicate the terminal phase of a trend. and at best it may just consolidate, otherwise it may even roll down if it refuses to actually break on the upside. Similarly, Nam Cheong, we see severe sell down. Again, you see a sharp up move before the sell down, and this is actually quite evident with the increasing daylight, and we have a sharp retracement that actually bring the price below 1326 MA, followed by a bounce here. Now what we can actually observe is a series of gap. And managed to take out this resistance, which is positive. So this is the gap I was referring to. We can actually take advantage of the momentum build here to identify setup for hit and run trade. So we like to see the pullback, and notice today bar has high volume. Look for pullback and look for setups to go long. Now this is purely riding on the momentum provided by this move. The moving average are not in order. OKP, similarly, very deep retracements, and there's a bounce here. More likely you will just consolidate. Notice a low volume. So if we can trade sideways, perhaps complete the consolidation and we look for a break on the upside. Likewise for Hong Leong Asia, there was a run up before the sell down, and you can see extremely sharp retracement, and now we are experiencing a bounce, and this is a weak bounce because the volume is actually quite low. More likely it will continue to move down. So we'll just have to observe, leave the stock alone for the time being. Next. Anyway, you can see the trend line I draw. I broke the trend lines and followed by a throwback. This is a classic throwback after the break of trend line. Again, we like to observe, if it's not able to regain above the 1326 SMA, more likely it will just roll down. Now when it roll down, we can identify setup to short. Let's discuss stocks because it generally is like the price persistency. This is CMC Gold Mine, and recently gold has ran up. If you notice, actually small bar, so this is not easy to trade. So recently we see the rally in gold, and this helped the stocks to actually move up. Notice a very big daylight here, more likely to pull back, and perhaps after the pullback, if the stock remain persistent, we can identify setup to short. Just to actually highlight what happens in the past. So this is what happened at that times when the Bank of Japan introduced negative interest rates. So, and likewise for ECB, we see actually very strong move after the consolidations. It managed to rally very well. So this may happen again, but we just have to actually wait for the market to unfold. Let's take a look at the bank stocks. So again, basically we just have to patiently wait it out. The dust need to some time to settle. This is DBS on the daily charts. Notice a very severe gap, and this is a bounce, and this right now offer the next first resistance. Alright, and the opposite likewise. So this is an important level to watch. If it's not able to clear here, more likely you'll move down from here. And again, we may see a couple of wild swing. Notice today's volume is actually not very impressive. OCBC. Similarly, huge gap, and this gap right now offers some form of resistance. UOB, extremely high volatility, but it exhibits quite similar pattern. It is just a counter trend move, 1326 pointing downward. Again, wait for it to finish its throwback, and perhaps we can identify setup to short the stock. And this is appeared to be quite a significant resistance. Alright, this now remember, resistance is not a line, it's a zone. Now a better bet is actually Singtel among the big cap stocks. This stock was actually strong prior to the sell down. If you notice here, we have a consolidation pattern, and managed to actually break on the upside. Unfortunately, we have this gap down, but managed to cover the gap. And yesterday itself, we do very strong move. We suddenly increase in volume, and today we have a gap rejecting the high. This gap provides some kind of support. Look for a pullback here. If we see shallow pullback, that will be very good. Notice we have very big daylight, so if we can just trace sideways, cross our daylight, that present us a opportunity, and eventually look for a break above 379. Another stock worth watching, ST Engineering. Managed to actually break on the upside. Today managed to make a high, but on a lower volume. It's likely to pull back. Look for setup during pullback.